Welcome to the Hog Market Talk podcast, your weekly deep dive into hog market fundamentals, breaking news, and industry insights. Trading commodity futures and options involves substantial risk of loss and is not suitable for all investors.
Today is February 17th. I've got Pat back with us this week. How's it going, Pat?
Good, Mike. How are you today?
Very good. Well, let's talk about the hog market here this week, Pat. Last time we had Luke coming on board. He was talking about the start and kind of middle of a sell-off that we had occurring through the hog market, reaching a little bit of resistance. Here today, we saw a little bit of reversal in that action, didn't we?
Yeah, we did. Finally had a little bit of an update here after a pretty significant sell-off as we went through the balance of the last half of last week. And really a futures market that we've probably seen a little bit of sell-off from managed money. Index fund money was up around 133,000 or so on last Tuesday, and the numbers were released on Friday. And so
that's near a record?
It's close to record, and probably we were due for just a little bit of correction because we've been seeing those guys pile into this market pretty significantly for a while here now, and really a nice opportunity that was offered to us as hog producers on that forward curve as we really look out, from April all the way through to December and beyond. And so that type of opportunity probably wasn't going to hang around forever. So maybe this is just a good, healthy correction. One thing, though, that I would note is that, we are in a time of year where we do start to see a little bit flatter markets there, and maybe you can show those pork cutout numbers, Cade. But it's not at all uncommon for us to see a fairly flat market here from Feb expiration through April expiration, and sometimes beyond. Pretty flat trend there, isn't it? And so maybe when that April contract in particular was showing a $10 or so premium to the index, that was a little staunch given historic seasonals for this time of year. And we try to blame that, and to some extent it's true, right? We've got the Lenten season starting here on Wednesday with Ash Wednesday, and so that whole time frame's a little bit early this year. And we just talk about no meat on Friday for the Catholics, and all of that as having a bit of a hamper on meat demand. But it's also just the time of year, right? Mm-hmm. I mean, we're past our holiday seasons and a little too early for spring. Although my twins did get 9 holes of golf in on Friday here in Laverne.
It's so nice out.
Isn't that crazy? Or Saturday, Valentine's Day, they're out golfing in Laverne, Minnesota. That's pretty cool. But anyway, just saying that this is the time of year where we are just a little bit stagnant on demand, and still plenty of pork production sort of hitting the market here. And so perhaps where the futures market is hanging out today is a bit more representative of spot fundamentals. Cutout does seem to be hanging out in that $95 area and pretty consistently. Mm-hmm. No real concerns there. Mike, we did see a little bit of a drop in rib primals month over month, but from some very significant levels. And I don't know if you can pull up that rib primal and power or not, but Cade, but that one was really impressive, right? For the time of year that it is. And this correction, still the level that it's at is from a historic perspective still pretty impressive, but it is a decent little correction from there. So seen ribs come down, bellies kind of come back up a little bit. There's the rib graph. Thank you. It's that little break we've had on and over the last 3 or 4 weeks or so. Bellies have seen a little bit of appreciation, so, and then I think the other thing that I'd like to talk about is hams just a little bit, if we could. And mostly as that sort of wraps around, and let's see, we've had a flat market there so far, and really good disappearance on hams into that Mexico market. And so one of the things that have been popular talking points over the last couple of weeks at the Minnesota Pork Show and also the Iowa Pork Show, it's not a popular topic, but it certainly has been one that's been talked about a lot, and that's our engagement relationship with Mexico.
Are you worried about that?
I'm a little worried about that. We've got and maybe a little more than worried about that is the right description, because we're very reliant upon that market, as it relates to pork trade here, corn trade
really
too.
A lot of ag commodities. Yes. They buy a lot of stuff.
Yes, corn trade too, for that matter, for sure. And so And so we'll see, we've got a couple pending things that are coming up here, three that are of primary importance that we care the most about, I suppose. The first one is the issue of the border and feeder cattle and screwworm and all of those things. And our contacts in the cattle industry, think that there's something that could happen by spring there as it relates to that border reopening. Interesting to keep an eye on for sure. The second one is the anti-dumping case that Mexico has levied upon us, and a response is necessary over the next 60 days or so.
And that's on pork, right?
And that's on pork. Thank you. Yes. And then the third thing is just the USMCA agreement, Mexico-Canada-US agreement, is up for renegotiation this summer as well. And so when I think about Trump, trade, tariffs, talks, discussions, we know Trump's behavior, right?
Yep.
He'll punch, and he punches hard, right? And if we just think about how Mexico has reacted to the punch and counterpunch compared to Canada, right? Canada has had a tendency to kind of, complain about bourbon and all these things, but Mexico has been a little more thoughtful about how they respond to the punch counterpunch. And so I do have some concern, I suppose, that as we are leading up to, this summer and our midterms and those sorts of things, that Mexico might use some of these pending items of topics that need to be discussed and figured out to maybe try to gain some leverage in those negotiations and maybe hit back or punch back into red states, which potentially could be some issues as it relates to ham disappearance or corn disappearance, those sorts of things.
What else is on your mind this week for the hog market?
Yeah, well, the supply side we haven't talked about yet, but we should. The popular discussions are all about the accelerated value of isoines and how they're very tight for this time of year. And don't for the longest time, when isoines kind of worked up to 100, even up to 110. Summer hogs are also trading at 110 and $4 corn. And I would say, well, yeah, that's a lot of money for an isoine, $100 bill for every one of those little boogers that walks off the truck, but it kind of works, right? Yeah. Now you start you're hearing about $100 and $128 isoines and now a correction in the summer markets. That doesn't work quite so well.
Well, now we're getting later into that marketing year too, right?
That's exactly
you're starting
right.
to push it back a little bit.
Yeah, good point.
So you're going to start getting crunched on time to place those things too.
So if we didn't have space going after baby pigs, right?
Yeah.
If we didn't have space going after chasing baby pigs here before, we do now for sure, right? And so the supply side does seem to be a little bit tight. Anticipating, a little over 2.5 million harvest this week. Weights are declining, perhaps just a little bit more than what we'd like, given the margin over feed here. And so maybe we have shackles chasing pigs here just a bit too. A little bit more indication earlier this week as it relates to some cash trade as well. So from a supply side perspective, Mike, things seem to be pretty solid.
Any specific numbers on just numbers right now? I know we've seen some interesting harvest speeds lately with some of the weather we had on the East Coast. Any comments on total numbers up front here?
Yeah, I think, just the 25-35 for the week is our guess. That's 125,000 Saturday or something like that. So I think it's aggressive enough given what we believe underlying supply to be.
Any final thoughts for our
listeners?
listeners?
Let's talk about grains for a second, if we could, before we wrap this thing up. What are the highlights for the week?
A few highlights here. We continue to focus on South America's crop development. South America, Brazil specifically, is 21% harvested on their soybean crop. So they're getting a little bit behind pace, a little bit dry through their country. They're looking for some rainfall over the near term. We'll see if we can get a little bit, but it's not crucial. They're planting corn right in behind that, basically starting their safrinha crop, which makes up a big part of their crop. So just a couple talking points with South America, the harvest that they're doing on soybeans as well. They just moved up in last week's WASDE to 180 million metric tons. So very, very big crop. It's massive, like over 6.5 billion bushels down there compared to over 4 in the United States, Pat. So that's getting a lot of talking points. Soybeans in general have been the main focus point of the grain markets here ever since Trump talked about the consideration of China upping from 12 million metric tons, which would be 441 million bushels of purchases this year, to up 293 above that. Now, the funds have found soybeans look a little bit sweeter. That would make a tight balance sheet. So the funds have been piling in here. So Friday afternoon, I was really excited to see the Commitment of Traders report, and they had bought a significant amount of soybean contracts net long. So it looked like the soybean market had really been getting funds pile into it on that old crop months. And that usually makes sense. When funds pile into something, they like to buy the first 3-4 months of it for sure. And you've seen that. So the spreads have been very interesting because new crop didn't get that full appreciation.
Right. And so on that front, we need to be careful of that because the funds are focused on a domestic balance sheet here that is allegedly tightening based upon tweets, right? And the global balance sheet is still somewhat comfortable.
Burdensome.
Yeah, especially given what we believe are the prospects for South America's crop. And so, so at least for our row crop friends, we need to be very, very cognizant of that. A little bit longer term, though, I for end users, be incredibly careful about the issue of complacency here, right? We're kind of 3 years running in a couple different hemispheres of trend and above trend line crops, both commodities, all three commodities, whatever, right? So we need to be a little bit careful that we don't get ourselves sort of into this false sense of security that that we don't have anything to worry about from an input perspective. Because we certainly do. I mean, if nothing else, to expect. I mean, the weather isn't going to stay this good, going forward for sure. So certainly worth being a little bit cautious on. And we were looking at some maps, earlier today, and drought monitor maps in the United States in February aren't important, right?
Good time of the year to have a drought.
Exactly right. But there is one in Illinois, and it's red, not yellow kind of a thing, right?
And even last fall, I remember somebody yesterday at the crop shop that I spoke at by Menno, South Dakota, they pulled up a deal that it was basically the driest in the last 100 and some years through the most of the fall months. Through harvest for most of the Northwest Corn Belt, especially. Hence why we had a fast harvest this last year. So we went into this winter pretty dry. This winter has been pretty dry, other than a quick 2-week cycle there.
Right.
We'll see what happens. This
Weather
next
patterns are going to
spring.
have to change. It's going to be interesting.
Yeah. See any delayed plantings, et cetera. So those are a few things that folks are focusing on in the row crop today.
Sounds good.
All right. Thank you for your time, Pat.
Thank you.